In this example, we are looking at the operating activities section of a statement of cash flows using the indirect method. So in the operating activities section, a few of the items that we're going to be looking at is we're going to be looking at how things affect net income. And then we're going to be looking to see if we have any depreciation or amortization or depletion, which are items we learned earlier in the semester. And then we look to see if there are any gains and losses. And then we also look to see if there are any changes in our current assets and current liabilities only. So those are the things that you want to remember that go into the operating section, and you can find that detailed in your book. So we're going to take this information and we're going to prepare the operating activities section. So the first thing that we do when we look at the operating activities section is we always put our net income in first. So from our income statement, we can find our net income, which in this case is $1.2 million. After we account for our net income, we're then going to do adjustments to reconcile net income to net cash flows from the operating activities. And then the next thing we look at is, do we have any depreciation, amortization, or depletion? Because if you think about what depreciation is, it's an expense that was subtracted from your net income on the income statement. However, it's not truly an outflow of cash. We didn't spend cash. It was an allocation of cost. So we always add back in any depreciation or amortization or depletion. So in this case, we're going to add back in the $820 of depreciation. Then the next thing you would look at would see if you had gains or losses. And in this section, gains are subtracted from our net income and losses are added back in to our net income. But in this example, we don't actually have any. So after gains and losses, then we look at our changes in our current assets and current liabilities. So you'll notice that we have an increase in our accounts receivable. An increase in accounts receivable, you have to think of it from a cash flow standpoint. If my accounts receivable account increases, that means more people owe me money, which means people didn't pay me money. So that shows as a decrease in cash flow. If you look at our inventory, inventory shows we have a decrease in inventory. So when it comes to assets, we always subtract out increases and add in decreases. But if you think about what inventory is, how do we get our inventory? Well, we have to spend money to get inventory. So since from 2013 to 2014 our inventory decreased, that means we didn't spend money. That means we sold the inventory that we had, which means we have a cash inflow. So we add it in. Then increase in our prepaid expenses. All of our assets, if we have an increase, we subtract them out. So we subtract out the difference. And then we go into our current liabilities. So current liabilities are going to act the opposite of our current assets. Anytime we have an increase in a current liability, that will be added back in. And anytime we have a decrease in our current liabilities, it will be subtracted out. And there is a chart in your book that explains this as well. So our accounts payable increased. So that's going to be considered cash inflow because that's money we didn't spend to pay anybody that we owe. Accrued liabilities decreased. So that means we spent money to decrease those liabilities. So we subtract that out. And then our income taxes payable increased, which means we owe more on taxes, meaning maybe we didn't pay some of it. So that is also going to be added back in. So after we account for everything that affects our net income, which in this case is depreciation, and then our changes in current assets and current liabilities, we end up with a net cash flows from operating activities in the amount of $1,640,000. So just a note on the calculations, anytime there's you put it in parentheses, you subtract it out. So this number, this 440,000 is 820 minus 700 plus 180 minus 80 plus 240 minus 40 plus 20,000.